All right, so let's get going. Boy, I've had a tough weekend. Get, guess what? Friday, my new computer shows up. It powers 18 screens. Spent a fortune on it. It's got an octa-core. It's, you know, 8 Xeon processors, just like redonkulous. So I hook up the first screen. I start tinkering away, getting Windows registered. That's good. Seems to be running fine. I do, like, no joke, 290 updates. Get all that taken care of. Everything looks good. Then to go hook up my monitors. Oh man, what? They're VGA and not DVI. Well, I only have 10 extra VGA cables laying around. So anyway, so I get the first 10 set up, which means I have to get behind my wall of screens that you see there. Got to get behind them, remove all the DVI cables. I only had 10, so I removed for 9 others, and then added the VGA cables and drag them across, and I'm stepping over wires. I mean, it's really complicated behind that wall of screens, right? I plug it all in, turn it on, computer's dead. Computer's dead, completely dead. Doesn't even boot to the OS. Yeah, I know VGA. I'm like, what? I didn't even check that. I didn't even think to ask, right? Oh, you gotta be kidding me. What? It's completely dead. Dead, dead, dead. Just a green light comes on the front. Nothing, right? Oh my God. I spent a whole day going through that process, right? And I ordered a whole bunch of these 12-foot long VGA cables, so I spent another fortune on buying cables. So here's what I had to do. I had to go back behind my wall of screens again, remove all the VGA cables, put some DVIs back, and rehook up my old machine, which all of this takes hours, and it's very complicated and frustrating. There's no room back there. And so I only got 4 screens running right now, so I'm kind of half blind. And I've had one of those weekends where I worked my butt off for hours and hours and hours and got nothing accomplished. But here's the cool thing. I hook up my old computer like I have now, and my $200 mouse, my fancy mouse, doesn't work anymore. It's just the USB drivers are corrupt. Oh man, I don't know. The mouse doesn't work. And reboot this and try that and do this and do that. Oh my God, got to throw away my $200 mouse. But I got a spare one, so luckily I had a backup one. So I put in my other $200 mouse. But just like why does that not work? So I'm in that role. But you know what makes up for that? Pips. So before we get going, how does this smell? Oh yeah. Mm, 255 pips, baby. Thank you, Euro. Love it. But but I'm flying blind. I only have 4 screens. Oh my God, I haven't traded on 4 screens in like 100 years. So hopefully today goes well. So let's get going, huh? I hope you had a fabulous weekend. My name is Wayne McDonell. I'm Chief FX Market Strategist for TradersWay.com. I'm a currency trader here. 10 years of experience. I'm here to be your guide, help you find success. Do these sessions every single day, 7:30 in the morning, a couple of hours before the stock market open in New York. Hey, if you're watching this on a website or a YouTube video, you're a pretty big lame-o if you don't leave a like or a comment. Imagine sucking an hour or two of someone else's life and not even spending 5 seconds to pay it back. Come on, seriously? Leave a like. Leave a comment. Love to hear from you. Let's get going, babe. Now, let me remind you that trading and investing is risky, not appropriate for everyone. Your past performance, however, good or bad, is not indicative of future results. But always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Beep. So there we go. Cool thing is, I think that was Friday's trade. I can't even remember. Let's just go around the world. Lots going on, right? Lots going on. Stock market in China was down, what, 10% or almost 10%. Stock market in Europe is down like 3.5%. Oh my God. Last week was horrible for the US stock market. What's going on? What's going on? What is going on? Yeah, China and the Fed's, you know, preparing to raise interest rates in the next, few months, right? In the next 10 weeks or whatever it is. And people need to adjust their portfolios. Now, China devaluing their currency, all right, well, obviously that's a sign they're in serious trouble. So that people have to say, you know what, China feels a little riskier to me right now, so I need to take some of that risk off. I think people are saying, hey man, we've been betting on zero interest rates forever in the United States. For those that are on sort of a one-way street, it's a good time for them to change their strategy. You know what I mean? But you understand, guys, like we're just in that time of year and in that sort of position in global macroeconomics and in particular various central banking policies that it's not that crazy, right? It's just not, I mean, yeah. I mean, look, how long have we talked about the third week of August being the week that the markets start to move? And then the exact day, the Monday on the third week of August, the Chinese stock market drops 10%. Wow, what a shocker. We've only talked about it for 9 months. Today was going to be the day. Oh, lucky again. So it's just, don't make a big stink of it. This is people adjusting their portfolios. The Fed's about to change their policy. China is in the midst of changing their policy. And guess what? These are the two most volatile countries in the world right now. Right? If you're betting and betting against this, then you're in trouble. So what was I hoping for? And then we'll move on to some trades, right? I was hoping for a big yen strength move, right? Do you guys remember talking about this? I want the yen pairs to come down, 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 down as much as possible. More the better. Awesome. And then I would like to buy it. Or not buy it, sell the yens, but I don't want to buy it high, right? So, good. Fine, that's all. But I want to go back to the euro, I guess. Euro. One thing that we've talked about and is on my mind always, okay, is that I do want this to come down. No, I'm long. It's fine. You can see all I did was buy a fib retracement, but there was lots of them. This is called price action, right? Right? There's nothing unique or even interesting about this move. There's no place on this chart for a short. Right? Joseph says it's slowing down. No, it's not. It's still riding the 21. This is going up, 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 up. It's going way up. Okay, let's review that very quickly. If you're above the 21, you're bullish and aggressive. And nothing on this planet is going to stop you. Okay? the way that I look at the market like this, or the trade when trading's like this, is that there is no resistance. You understand? There's only support, and that's where you buy. Igor says thinks it's going to 16. Why not 20? Why not 22? Why not 30? I mean, it's going to go up until it stops going up. Okay. Now think of it. A lot of people were betting on the Fed raising in September. Now people are not 100% sure anymore. So they got caught in the wrong direction. But somewhere between right this second and September 17th, I do believe the dollar will get strong again, because those that are very, very bullish on, or let's say hawkish on the Fed, will come back and say, you know what, they are going to raise. They're going to surprise everybody. The Fed doesn't pay attention to stock market, declines. They're going to do it. You're right. Why paint themselves into a corner in December? If they're going to do it in December, might as well do it in September, right? So they'll push for that. Now, if they're wrong, of course, then when the Fed on September 17th says we're not raising interest rates, then that'll be disappointing and the dollar will weaken again. So just imagine the human side of this. This is going to go up, and look at this. It just went up another 30 pips, just like that. I just told you there's no way in the world it's coming down. Awesome. Look at that. Just made an extra $400 in the last 2 minutes. Nice. So this is going to go up and up and up to a point where whoever wants to bet the Fed is definitely going to raise in September, they're going to start betting again. Okay? And then it'll go down, and if they're wrong, the dollar will weaken for a while, and then they'll start betting on the December move. But the December, I believe they actually said they for sure are going to do it. So, when is it going to get wrong? Well, depends on what the Fed does, doesn't it? But in between, you're going to have ebb and flows of dollar weakness because the Fed didn't do it. And then there'll be, the flow back down because people think the Fed will do it. And eventually it will happen, right? So that's that. So how about things like, that, how about things I was wrong on? You want to do that? Let's do that. I will show you the oil chart. Man, oh man. Oh, here it is. Oil, I don't know where it's going. Look at that. I don't know. I don't know where it's going. Oh, Igor's a Kiwi yen. Got to be careful. I think I spoke about that for a half an hour just 2 days ago, or 2 trading days ago. All right. I think I spent at least a half an hour that I never said to bet on a Kiwi yen long. I said find the support and be ready for it. And if you get reversal patterns, you take the shot, jam the stop, and never get out, which is way different than betting long. So I don't think you can say I'm wrong. Well, yeah. So find the next level of support and wait if you want to do that, right? So we have the plan here. Was it consolidating? Yes. But we were still way below this area. We talked about it very, 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 very clearly that the likelihood of this going all the way up like this is almost nil. But if you can take a shot by buying it at support and jamming your stop, maybe you get lucky. But there's nothing on here that's bullish. I think I was incredibly clear about that. There's nothing bullish about this at all. Not even a little bit. So it's come down, but that doesn't make it wrong. Okay, the strategy that we talked about of pyramiding, if I went long here at support and then jam my stop, that's not wrong. Oops. Okay. Now, if you're holding a trade and you're losing money, that is wrong. That is absolutely, totally, 1,000 times wrong, 1,000% wrong. Absolutely no way I would ever do that. And I'm pretty sure it must have been Wednesday or Thursday of last week. I must have spent a half an hour just on Kiwi yen and pyramiding. And I think it was the one about trading like a hedge fund. So, yeah. So, again, I don't think I'm wrong there. But if you're long on this, you're wrong. Because I never once said that. And I know I spent at least a half an hour clarifying that. So, there are plenty of things where I'm wrong, but I ain't wrong about that one. That's a high risk trade. So let's go back. What I want to point out with oil is I don't have anything after this. I don't have any alpha on this. Any lower? Don't know. All I can say is I'm glad I shorted you guys at 62, right? The 61.8, which is actually a 382. How funny is that, right? The 382 at $61.80. Yeah, all the way down to 40. Okay, that's cool. Now what? I don't know, man. Because, you know, I don't know. Is it going to go to 20, right? The 382 predicts the 1618. That puts oil at $14 a barrel. I just don't think it, right? Right? It's just, I don't think it's going to 14. Yeah, peak oil is always silly though, George. That's like, what they'll do is they'll flip over and talk about how the dollar is going to be worthless and be replaced as a reserve currency, or that the Fed is some, you know, evil monopoly run by the Illuminati to, you know, rape and pillage the world's financial systems. I'm like, what are you talking about, dude? So whatever. So anyways, so my point is, I don't think, I think it's oversold, meaning like I think it's too low right now. And this is more emotional than anything, but right, the market can stay irrational longer than you can stay solvent. So it's falling, and I think it's falling too far. It's falling quickly. Okay. I don't know. I don't know. I don't know. But if I were to use a longer term piece of analysis, let's use global macroeconomics. Okay. And I don't want to spend too much time on this, but let me walk you through again. The Fed did quantitative easing, and it took about 5 years to get it right, to get, you know, stable again, let's say. It's about a 5-year process. About 2 or 2.5 years into the process, you start to see green shoots. You guys remember talking about green shoots or hearing it on the radio or TV? Green shoots? That used to be the big thing. Just the very, very first signs of, you know, of the positive effect of quantitative easing. All right. So that puts us about, I don't know, 18 months for us to see green shoots out of the quantitative easing policies of the ECB. Okay? Which means it's going to be a difficult year still for China, because let's say it's one more year. Let's say it's not 18 months. Let's say it's 12 months for green shoots for Europe. That means 18 months to 24 months for China. Although I think the world is smarter now that we've gone through this quantitative easing, both with Japan, who invented it, didn't perfect it, but they invented it, and then the Fed really took it to another level and got some positive results. So I think the world's now familiar with what was considered a radical policy. So maybe it doesn't even take that long. Maybe it's only 9 months for green shoots out of Europe, and that means a year and a half. Because like when green shoots happen in Europe, then the average Juan starts to feel more comfortable about his job, that kind of stuff, and maybe decides to go to the store and buy a plasma TV made in China. Plasma, how old am I, right? He wants to buy a 4K TV, and it's made in China. It's actually probably made in South Korea. But anyways, let's go with it. So then all of a sudden, the Chinese factories start getting orders, and then those factories start ordering raw material from Canada and Australia and whatever, and global macroeconomics start to improve, and things like oil and gold and all this kind of stuff start going up, not down. Okay. So that's that. The thing with oil, and I guess you guys might be chatting about it as I'm talking. The oil, what you're looking at is it's a technological revolution. This isn't all supply and demand. So right now, with China slowing down dramatically, we have the demand is low. Fine, great, fine. Demand will come back. That's what I'm saying. It might take 6 months, 12 months, 18 months, but it'll come back. But this is almost comparable to the internet revolution, where suddenly companies in the United States in particular, when it first came out, they were dramatically more productive and efficient from radical new technologies that allowed them to do all kinds of things, like sell billions of dollars worth of products and not actually have a store. Imagine how it used to be where you had to open up 1,000 different retail stores to sell books. Remember Barnes & Noble? I used to manage a book club at Barnes & Noble when I was in college, because Amazon was too young back then. So you'd actually go to a bookstore, and you'd go to bookstores to meet women. How awesome is that? Go to a bookstore, get a nice book that made you look smart, and then belly up to the Starbucks bar in the middle of the bookstore. Very 90s, right? Well, and all of a sudden the internet came along, and you didn't need 1,000 retail stores, and now Barnes & Noble is a big store. Okay? So my point here is those stores are now closed. There was 1,000 of them. With, I mean, just imagine how expensive it was to run one of those things, just to build them and to own them, right? Yeah, it still works. Well, okay, dinosaur. Charlie the dinosaur. But you're right, there's 2 or 3 of them left. But, I believe the net cap of that corporation is probably down about 95% from its peak. But anyway, so the whole world changed on them, right? They're like, oops, I guess we didn't need 1,000 bookstores. And meanwhile, there's Amazon. They have billions of books, right? Great. Now we have oil that takes 30 days to come out of the ground. It used to take 2 years to get oil out of the ground. Now it's 30 days. So for me to exaggerate for effect, almost any idiot can get some oil, right? Just imagine a farmer, he's out there with a shovel and a bucket. You want more oil? Not a problem. He'll go get some oil, right? Uncle Jeb shooting, right? And one day, or how did it go? Listen to the story about a man named Jed. Poor mountaineer barely kept his family fed. Then one day he was shooting at some food, and up from the ground came a bubbling crude. Black gold, Texas tea. Right? It just, boom, you can accidentally run into it. So it's fracking has made it is a technological revolution similar to the internet that brought productivity and communication advancement to businesses. It's like that where all of a sudden you need oil, we'll get you oil. Oil, that is. Stephen, right? You can pull it out of the ground in 30 days, and that means cheap, 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 cheap. We can get oil for cheap. You want oil, we can get cheap oil. And the interesting thing about it is half the countries on the planet that used to not be oil producing are suddenly oil producing. So this could go low. I'm at the point where I don't really want to even guess where it's going to go because I'm comfortable right now with $38 of oil. It can go down to 25, I suppose. And with lots and lots of supply and very, very little demand, then maybe that's right. For me to pick out the equilibrium point right now, you know, I'm sort of done technically speaking, because again, if I were to use technical analysis, and we did talk about this 2 months ago, it said 14. I have a hard time believing 14, right? I think eventually demand will come back, but what's the new equilibrium point between supply and demand? It would be very, very hard for me to say, especially at this point. So I just want to point that out, that, you know, I don't have the answers for everything. We knew it was down. I prepared you guys for months to sell it here. Now what? You know, honestly, I don't know. So I'm sort of out of that game. But this could be, you know, maybe this is a good thing for, you know, for those that need energy. Now energy is going to be cheap. For the unforeseeable future, I think this is going to be, you know, very good for humanity that wise. You know, there's the short-term consequence of it, though, is we're not getting it's dragging down inflation. And the world has spent trillions of dollars, actually many trillions of dollars, tens of trillions of dollars if you take all the countries, put them together, to create inflation, and now we don't have inflation just because of this. And the other consequence is sort of like Tata Motors in India making a $1,000 car. Probably the worst invention ever. You know, actually, I'll say the worst invention ever was probably the cotton mill. There's a little device where you put in a bunch of raw cotton from the fields, and it's covered seeds and leaves and stuff. You run it through, it pulls it out. You used to have to do it by hand. It was very laborious. And before the cotton mill was made, you know, cotton plantations were basically not profitable. As soon as that cotton mill, what was it called? A cotton gin? As soon as that was invented, and one guy could sit there for one day and process bales and bales and bales and bales and bales, suddenly slavery was on in America. Boom! Now, if you wanted to be a profitable plantation owner, you just planted more cotton, got more slaves, because you could just get another cotton gin and not a problem. That was the worst thing to ever happen in the United States. Production of cotton went way up, but so did slavery. It sucked if you were a slave. And let me tell you, I live in Georgia. You don't want to be out in those fields in the middle of a Georgia summer working for a slave owner, let me tell you that. So, you know, worst thing to ever happen. So what's the new worst thing to ever happen? Invention? Tata Motors and making cheap cars, polluting the air of India. Can you imagine every idiot on the planet now is going to have a car? The worst thing ever. for the planet Earth. I'd say, you know, we need to get to a point on Earth where we say, you know, almost nobody should have a car, kind of thing. You know, like, oh man. So just imagine an extra 100 million cars on the roads. I mean, oh my gosh. So what I'm thinking here is cheap oil. Oh my goodness, this is going to be terrible for the environment. Because now think about all the people not buying hybrids. Think about all the, you know, all the people not buying Nissan Leafs. Just think about everyone going back to their giant trucks and their Hummers. And I think this is going to drag us down through, you know, we're going to lose 10 years of advancement because of this, right? So anyways. Is that right, Eric? Is that true? Car insurance costs more than the car? Wow, that's interesting. Yeah, well, and then so in places like Denmark, and I think it's Sweden too, right? Or is it Norway? I guess it's Norway. Um, is um, has an outrageous number of Teslas because the import fees are so much lower or something because of electric cars. But the only reason to buy a Tesla is just dramatically a better car than anything else on the planet. That's why I was getting really excited. I was getting excited about buying a used Tesla because that's something that I wanted to support is the so that it becomes basically a regular car. So I might just pick one up. With oil prices coming down, they'll probably the values are probably going to drop. But the reason you should buy a Tesla though is not because it's electric, because it's dramatically a better car. That's very interesting, Grace. Yeah. In Nepal, taxes and duties cost 200. Wow. On top of yeah. Plus you got to ship it there, right? Do you see a lot of Teslas in Nepal? Thousands of them. Yeah. Yeah, I need to go to Nepal, man. I'm going to put that on my list. There's so much I got to do. All right. So anyways, that's that. So I'm happy for these yens to fall. And the interesting thing is I don't have to be the first one in them either on the way up. Yeah, DeBeast, I'll stuff a computer in my suitcase for you. Mark, are you in Zurich? Yeah, I love Zurich. Nice town. Good people. Yeah, I was there in the 90s. Can you imagine me at Street Parade? Yeah. I was a girl. What can I say? Do crazy things for girls. All right. Sebastian, yeah. I had the 55, not the 63. I can't even imagine. 5.5 was enough. 6.3 is just ridiculous. So anyway, so I'm going to let these things fall, which, by the way, doesn't mean you can't sell. What I would like to see eventually, and you know, I don't know if it's going to be in a week or next year or maybe never, but I would like to keep my eyes on key levels of support. You know, but you can see we're blowing through a lot of monthly pivots and stuff. So I got to kind of just relax. You got to stay calm, right? Stay calm, trade on. So some yen strength, some dollar weakness, that's fine. But you know, we should keep on some other markets. Hang on. I want to look at things like let's do some cause and effect stuff. Hey, would you guys want to trade the stock market open with me today? I don't think I'll record it because the recording will be too long. But it's a big day, right? With futures down so much. Yeah, I'll do that for you. We'll actually listen to the guys on the trading floor. We'll actually hear the pit. I'll do that for you. If I upload today's video to YouTube right after this, you know, will you leave a like? All right, so how many people are in the room? Let me check. Oh. How many? I gotta move this window. Oh. How many people? Oh, wow. All right, there's 89 people in the room. I will upload. I'll stop this recording a little bit earlier today. We'll continue with the webinar, and I'll upload it, and that takes me, so by 9 o'clock, should be up there. I'll leave this room open. If, let's say if 40 people leave a like, I'll come back and I'll do the stock market open with you. All you have to do is leave a like on YouTube. Okay? I just, you know, the positive reinforcement, you know what I mean? All right, so what was I going to do? I want to do the 10-year T-note here with you guys. And there, this is all markets dashboard. Oh, maybe it'll bring me up. What I want to take a look at is the 10-year T-note. And one day we'll probably have to go through and talk about things like the steepness of the yield curve. Does that sound sexy to you? Does that sound sexy? Commodities, bonds. You like talking about the steepness of the yield curve with your buddies on the weekend? All right, so what I'm particularly looking at this is 10-year T-note. Oops. Back below 2%. So what's going on? Investors are buying that 10-year T-note. Why doesn't this link through to a chart? What? Bloomberg used to be such a good site. They've messed it all up. Well, this one does. How funny. Okay. Now notice this. The coupon on this particular treasury pays 2%. But because current rates have dropped down to 1.97%, what does that mean for price? If you're holding something that pays 2%, but the current rates are only paying 1.97, is yours gone up in value or gone down in value? Right, because you can go to the market and the government will say, if you go to the government, if you go to the treasury, they'll only pay you 1.97% is the theory of it, right? But someone that bought it a couple of days ago, they're getting 2%. So you're like, well, why would I want 1.97%? I'd rather have the one that pays 2%. So you have to pay a little bit more. Okay? So whoever bought this one for that pays 2%, he paid $100 for it. Okay? Now you have to pay him 32 cents more. Okay? So prices going up for bonds means people are buying bonds, right? Now I wanted a nice chart. I mean, so I guess I'll do it this way. Oops. Golly, this stupid website. It's running all this crap. It's so unbelievably slow. What? What? It copied some other thing. Oh my God. Unbelievable. All right, let's try it. 10-year. There it is. Look right out of there. Well, forget it. Stupid Bloomberg. All right. But anyways, people are buying it. Oh yeah, that's probably a better one. Let me look at this one. How intrusive. All right. So yeah, it was not long ago that we were at got pretty close to 2.5%. That means people were getting out of bonds and they were buying stocks. Why would I block ads? They're supporting the website. If you're using investing.com, for example, and you're blocking their ads, you're kind of stealing from investing.com, aren't you? You gotta remember, I used to be a venture capitalist investing into intellectual property. So I'm a big IP fan. Somebody had to spend money. I mean, didn't investing.com spend $2 million buying the domain investing.com? I mean, there's somebody building this website and offering you information. So I'm like, I'm not going to block their ads. But anyways, that's just my point of view. I'm not saying you're wrong. I'm just saying that's my point of view. So anyways, so people are buying bonds, man, and driving down yields, driving up prices. Now, don't you remember there were several high-profile traders saying that a bond short was, you know, sort of the trade of a lifetime, which means they thought these yields were going to go up. So anyone that had bet serious money on having these yields go up, they're kind of in a world of hurt, right? Now, this, I also remember, this was the taper tantrum. We were at 3% on the 10-year T-note, guys. 3%. 18 months ago. Isn't that interesting? Well, hey, Albert. I haven't seen you in a while, have I? So anyways, you know, we're still not getting these rates up. Very, very interesting. Okay. So anyways, we'll have to watch that. There's a lot of money that's been put into some of these trades, and they're getting caught on the wrong side. And so some of this, you know, overreaction in many cases, right? So this is all very, very fabulous stuff. Oh, look at that. I gave the $400 I made in four minutes. Gave it back. Yup. So very, very interesting stuff, and it's moving fast, and it's a lot of people are caught going the wrong direction. And then, you know, how I feel is it's going to be like 2 steps back, but eventually 3 steps forward again, right? Well, you know, Grace asks if there's going to be a giant crash today in the stock market. You know, plausibly, sure, why not? The thing is, why don't you create a plan for it? So let me ask you, Grace, and anyone else that wants to answer, do you want to own the stock market next year? Anybody? What would you like to do? Would you like to own this thing? Would you like to own the U.S. stock market 1 year from now? So all you need, right? Do you want to be in next year? Well, then this is a buying opportunity. Where would you like to buy? And if you were a fund manager, you would have called your team in, and you'd be sitting around the conference room, and you're saying, what should we pick up? Right? What should we pick up, guys? Right? What's been overpriced for a long time, but we still wanted to buy? You know, like, did you miss the mark on Apple? Did it get too expensive? Was it too many? Was it too much dumb money in one direction? See, I like to look at these things as like smart, intelligent people create a lot of these trends, and then, you know, dummies crowd the trade late, and it just gets top heavy. So the smart money buy in. Okay. So that's it. Just what would you like to do? What would you like to buy cheap? What's your goal? What's your focus? Right? When everyone else is freaking out. But just remember, it's top heavy. Up here, just lots and lots of dumb money buying in at high prices. So pick your point. Okay. I wonder if we can change this. It's not there anyways. All right, well, let's clear this out. Let's just do our work. Okay. Insert, indicators, custom, right? Big money, no whammies. People don't know all the things I say and do. They don't know. Yeah, because it's been so tight. Did I do that right? Was that monthly? And weekly chart again? All right, well, yeah, there's a lot of things that saying this can go down to 18. Cool. Maybe I forgot. So even these monthlies are no good. We've blown through them. Once I was setting them up, I realized just because it's been so tight for several months, they're going to be too tight. So yeah, futile. It was all futile. In my heart, I know it's got to be more than life than bliss. So yeah, it should be an interesting day. So why don't we trade it together? You know, I was going to go through things like the Committed Traders report and stuff, which is typical Monday. I just don't think it's even necessary, right? Like, I mean, who cares? It's so last week. Tabista, I think the quote has something to do with blood on the streets. That's when you buy. Okay, but that's when you're a value investor as well, right? All I'm suggesting is there's a normal ebb and flow. Um, there are some that stay calm, stay focused, and they have invest on serious, you know, corrections. And all the idiots are at the top and they're fully lit and they have no dry powder whatsoever. They're long, they're leveraged, they're late, right? The 3 L's, right? They're long, they're leveraged, and they're late on all their trades. And so they get knocked out, the whole thing comes crashing down. And some guys have already cashed out at the top. They already got dry powder, which means they have money to invest again. Thing comes down, and they already know the top 10 things they want to buy anyways. So the whole thing comes crashing down and they buy low. But isn't that what we're supposed to do? No, but Vikrant, it doesn't matter anymore. That's what I'm saying. Based on what's just happened now, all of that is irrelevant. Yeah, VIX. I don't have a VIX chart anymore. We can do that. Do you have a link to a good VIX chart? But all I'm saying, guys, is that you're supposed to be focused. You should have a bias. If the market's not going in the direction of bias, you just back out. Well, we'll do market watch maybe. So this was a dramatic move. And VIX, is this going to let me expand? No. But anyways, you can see from 14 to basically, well, let's call it 15 to 30. And so what this is, oh, is this a better one? And what this is measuring is fear. It's called the fear index. This really, what's happening is it's people buying options on the S&P 500 as a hedge. So if they're buying an insurance policy to protect their positions, they're obviously worried about their positions because otherwise it's just throwing money away. So there's been a dramatic increase in hedging of the cash market. And I don't think this is going to be any better. Does it let me expand this out? I suppose it's a little easier to see, but now, so anyways, what the other way of using this is if volatility is incredibly low, so let's say you're around this 10 or 12 area, that means nobody is buying insurance, which means nobody is scared. Everybody is long the stock market. And some people use that. Is it up there? This one? It doesn't pop out, right? That means add another chart. Oh, there it is. Okay, good. Thank you. And all right. So it's normally, around 14 or 15. If it gets too low, if it gets down to 10, the market's overconfident. There's no insurance, and if the market drops, a lot of people are going to get. Okay, and obviously, if it's high, it's fearful. Now, I wanted to show you this because there was a time when I was doing, training at conferences and stuff. I remember a couple of times in New York, I talked about the VIX. I did whole presentations on it, and no one even had 60 on a chart. Like VIX, the high end of the VIX was 20 and low end was 10, right? And we were at that time, I remember this time when we were at like 50 and more. It was just like no one even realized that it could be that high. Okay. So again, what this is showing is fear has dramatically gone up. Is there, I mean, it could be right, but let's talk about this. Is there something that's occurred? Is there one thing that's occurred that should dramatically increase fear? Or is it just hedging? What made the VIX go up? Can you think of what was the catalyst? Yeah, but isn't that the proper thing for them to be doing? Breaking themselves eventually off of the peg? I mean, like I spent a half an hour on that. The day the Chinese devaluation was announced, I spent probably half an hour talking about the CNY versus the JPY. I mean, Japan's been devaluing their currency for, well, let's say for a very, very long time. They're direct competitors. right? So I don't see anything wrong with the Chinese devaluation. So what? It's what's needed. I mean, like, the problem with Greece is they couldn't devalue their currency. That was the issue. They were locked in euro. So China just simply would, in this situation, cut interest rates, cut RRR, and devalue their currency. Yeah, well, that's what they're doing. So I look at that as a necessary step. So that doesn't freak me out. I understand why they're doing it. Okay? But is it the end of the world? I mean, that's what we're talking about, right? It's the end of the world as we... Really? Okay, well, so I don't think it's China. I think China is a consequence of Europe. And Europe was really slow to act. Okay? But... So I think all of these are fixes. I think quantitative easing in Europe is a fix. I think our cuts, interest rate cuts, and devaluations will make Chinese products more competitive. That can't be a bad thing. I mean, seriously, I just talked about it the other day. I was at the store, and I saw this big sign at the way up high. 65-inch 4K TV, $1,000. I'm like, oh snap! So I'm running there, right? I just dropped my wife and kids. I'm like, get away from me! Boom! And I just like push them out of the way. I start running down the aisle. Oh my god! And I get there, sold out. Oh, son of! But a 4K TV, 65 inches. For $1,000. Holy crap. Well, look, if somebody's making them for cheap, right? Well, first of all, they got a job, but that's if China devalues their currency, so I can buy a giant TV. Like, look, I have a friend, he just built a movie theater, and I used to have a movie theater in my old house. So he asked a lot of questions, and he's like, I want to get a 4K TV. And hanging on the wall is a projector. I'm like, no way, man. I said, go find the biggest 4K TV you can buy. How much is it? And it was like 55 inches. It was, no joke, it was like $15,000 or $20,000, right? This wasn't that long. I'm like, 55 inches, we'll have to like crowd around it. We'll all have to sit on in the same chair. To see it. I'm like, you can't run a movie theater of 55 inches. I'm like, and what? There's nothing to watch on it anyways, right? So don't be a dum-dum, right? So get yourself. I said my old projector was a 1080p. I had a 110-inch screen. Your room's even bigger, So get yourself, a 180-inch 1080p, and it'll be fine. I mean, it'll be good enough, right? But now you're like, we're not getting that far away. I bet you, if you took the $20,000, I bet you could get a 110-inch 4K TV. And it's only been, so what I'm saying is prices have dropped 90%. 90% in about 18 months. 90%. So, if China's devaluing their currency so I can buy a bigger TV, right? Well, bless their hearts, as they say here in the South. When it's actually an insult, but bless their hearts. So, cool, man. By all means, devalue. Yeah. Oh no. Yeah, that stuff's fun for. I never really watched movies in my theater. I only played video games. But it's cool, like on Thanksgiving, the whole family comes around, and everyone crowds into the movie theater. But and that which means quiet time for me. It's perfect. Take 12 kids, jam them in a movie theater, put on a cool movie and walk away finally. Except the floors vibrate, right, because of the sound. But anyways, so if China devalues, that's not a global crisis to me. It's what's necessary. So I like that. You know, have them moving away from the dollar peg. Well, why do you think their currency is overvalued to begin with? Because the U.S. dollar is overvalued because it's been bought up and all these different things. So it's a necessary step for China to start to walk away from the peg. Good. On the long run, probably. So I guess where I'm going here, and then we got to wrap up. Yeah, look, the markets are coming down. Don't fight it, all right? But eventually you do want to buy, and I want you to be open-minded to that, and I want you to be calm and focused and be sort of just have situational awareness. It's not all the hype. Okay? So eventually you're going to want to get back in. It probably won't be today. It might be, but you know, just careful about it. Don't be stupid. Don't be a gambler. Ask yourself, or how about this? Tell yourself you're being tested today. And this is real. Are you going to behave like a professional? Or are you going to act like a degenerate gambling retail trader? Selling low, buying high, chasing price, freaking out, right? Hey, Albert, did we meet up in Vegas? Is that the right, Lions? Do we meet in Vegas? I think it was Caesars. Probably 6 years ago. Is that the right guy? I think it was. I think it was that party. Rented the penthouse at Caesars. Brought in all that catered food and drinks and stuff. I think you were there. Yeah, I guess so. Really? Is that right? I swear I knew an Albert Lyons. Never talked to you. Interesting. All right, well, cool. Just a very interesting coincidence. Yeah, very interesting. I swear, an Albert Lyons. Well, I guess there's more than one, right? And the funny thing is, you guys might have been in the same room. Meaning, like, at the conference and stuff, two Albert Lyons walking around. So that's interesting. Well, anyways, good, nice to have you anyways, especially if we saw a long time ago. Seen me at an expo. That's cool. Well, I hope I didn't suck. You're like, yeah, I saw you at that expo. You sucked. Hey, it could happen, man. It's not my business though. I'm in the business of awesomeness. No, I don't do the shows anymore. I did them all 10 times over. I only did them as basically as vacation, but nah, I got kids. To have fun. I like to stay home, have fun. So, all right. So I'll tell you what. Here's the plan, guys. I'm going to stop recording. I'm going to upload to YouTube, and in maybe 20 minutes, it's going to be up at YouTube. So around 9 a.m. Either go to tradersway.com/c/tradersway. No, I didn't do that right. youtube.com/c/tradersway. Or wait in the room here. I'll give you a link. And at 9:15, there'll be like 30 or 40 likes. And if so, I'll take the mic again and I'll broadcast the live trading pit at the S&P 500. Chicago Board will actually hear them scream out their orders, and we'll hear Goldman Sachs dumping everything they own. But if there's not enough likes, then I'm just going to do my job by myself. That's fair, right? And I'm doing this because I know it's an important day, and I know you're a loyal client of TradersWay, and I know you're a loyal attendee of these webinars, and I know today is an important day, and I want to be here for you like you've been here for me and for us as, you know, tradersway.com. So all I'm trying to say is I appreciate you and all that you do and the hard work that you put into becoming a better trader. So I'll give me the likes and we'll continue. So again, thanks guys. Recording? Stop.